Welcome to another episode of the Property Nerds podcast. I'm here with Adrian, our senior portfolio strategist at InvestorKit, and also Jack from Fouracre Financial. We're going to go into what makes a winning strategy. Everyone asks us about, hey, what sort of strategy I should be building for my portfolio? What should I consider? When instead, people keep making these mistakes of the property and isolating everything to do with that rather than thinking broader than that. So we want to take a step back in this episode to go, what makes a winning strategy? What are all the components you should consider? And we'll even at the end of the podcast, talk about when you shouldn't buy property. So stay tuned to the end for that one. Let's get into the episode.
Nerd Alert! Property Nerds, the home for data-driven property investors, where we uncover Australia's hot and cold markets, latest headlines and trends.
So guys, we're talking strategy today, and I'd love to say it's a sexy word, but it's not really. Like it sounds...
I think it is.
You think it is?
Thanks, Jack. Strategy.
Yeah, thanks, Jack. Nah, I was just trying to see if I could get Adrian just to get worked up to go, it's not sexy, you're talking strategy. But Adrian, I know there's many people out there who don't know what strategy even is. People use the word loosely and they assume that that's a strategy that they're thinking of, but maybe it's not. Could you maybe give some light to what actually is a strategy when it comes to property investing?
Yeah, 100%. I think it can be a bit of a fluffy term that a lot of people throw in and they don't exactly know what it is. But I think it can be quite complicated, but in its simplest form, it really is just about a sequence of steps that you're taking and following a framework to get you from your current position where you are now to your actual goal. And that's all it would really be when it comes to strategy. There's a lot of aspects which we can sort of dig into later on of what composes the strategy. But largely, it really is just those steps and the sequence of where we're going or how we get to where we're going.
See, that's the key thing that many people get wrong. It's like they don't recognize that it's that simple. A sequence of steps from where we are to where we're going. You know what isn't a strategy? It's positive cash flow. That's an outcome, right? It's not a strategy. It's like if you want positive properties as part of your portfolio, that could be a strategy tactic, but it's not the strategy. What kind of things do you hear on your journey? Because you build many strategies for clients or build portfolio strategies. What are some things where you're like, yeah, that's not a strategy, that isn't what it is?
Yeah, it's exactly what you said. I think what you've mentioned is, positive cash flow or whatever sort of asset that they're purchasing. This is a component of the strategy. It might be a small aspect that allows you to actually execute on your overall strategy. I think a lot of people think of positive cash flow or high cash flow or purchase in Perth. That's usually when it comes to the acquisition side of things, they're thinking about the actual purchase rather than taking a step back and reviewing it overall from that overall picture of your finances, what aligns with your risk tolerance, everything like that as that overarching strategy rather than really honing on that one purchase that they're making.
Yeah, now you talked about finance. So we're going to come back to Mr. Mortgage Freeman over here. Jack, finance, talk to me about how finance plays a part in strategy. Now, what I mean by that is we know that property is a game of finance. What do people often not consider when it comes to finance and strategy in a portfolio?
Well, I think that oftentimes what stops people from moving forward is finance. So finance is what's going to allow you to scale the portfolio and continue pushing ahead. I would say that I feel like accounting there's a bottomless pit of strategies in accounting. Once you get as an investor, once you get to a higher level and you've got multiple properties, you start looking at trusts and SMSF, all the different strategies that are involved in that is where you can really push ahead in the finance. So when that kind of merges in, the accounting strategies merges in with the finance strategies, that's when someone can really start to push beyond what they thought they could. But it's not right for everyone, but yeah, that's I think it's pretty important to, once you get to those multiple property type portfolios, you start looking at those different sort of accounting strategies that you can work with your accountant on, because that works really well with a broker who knows what they're doing on that side.
So when it comes to people actually incorporating finance, what are some of the mistakes you see people make? They've built out a plan of how many properties they want. They feel like this is the strategy that they're built to get from A to B on their portfolio, and they're set. This is how I'm going to get there. Where does that goal turn into a reality versus that's a dream now because you're not considering these things in finance?
It's weird, man. A lot of people, you get some different contrast to people. Like some people just get held back by fears. They're like, oh, there's something going on in the world, and I'm just gonna like wait a little bit. And then you get other people that are just being irresponsibly aggressive. Like they're just
like two different sides of the
whatever
thing,
it takes. Like I don't care if I have to buy a shack, like a 2-bedroom shack for $100,000. I want another property, you know?
Yeah.
So you get a lot of different types of people. But I mean, sometimes, man, I get some investors that like, they're about to get their third property. They're like, look, I'm thinking I want to buy a car, you know, but I need a car loan. And I'm like, what are you talking about?
Yeah, so that's one way to break that financing.
Yeah, you want to stop borrowing money, get a car loan or get a novated lease. Like,
what's the differences like? That's because I want to like help people visualize that. If you're talking car loans, credit cards, these types of things.
Yeah, man.
Obviously, they're big blockers on people's finance strategies and building up a portfolio. How bad is it? Like, what is it like? What's a calculation look like?
It's pretty bad. Like, if you're getting an $80,000 car loan, right? Yeah, it's on a 5-year term. Like it's different if you just get a $80,000 split on your house equity. That's a 30-year term. That's really minuscule for what it does to your what it does to your overall borrowing power. But you've also got an offset facility attached to that as well. Whereas like on a car loan or a novated lease, that you're just paying the full interest over the term, and you can't offset it with extra money. Like so, if you tie it in with your home loan product, it's actually not that bad. But massive credit card limits typically become a roadblock. And it's not that it's necessarily a roadblock. It just reduces your lender options and pushes you to the back of the line in terms of like what lenders are available to you, which paying a higher rate and running out of lender options is, definitely going to hold you back.
Well, I mean, if I'm just doing back of the napkin math, if you've got a car and it's like an $80,000 loan, 5-year term, and you've got a mortgage on a 30-year term, the difference is 6 times, right? Meaning, are we saying that an $80,000 car loan is the same as like a $480,000 home loan? Is it kind of like work like that? Is it close to those numbers?
Yeah. I mean, you've also got a higher interest rate on a car loan than you have on a mortgage a lot of times. So that comes into it.
It's even worse, honestly.
Yeah,
it's horrible, man.
It's worse.
Like I always say to people, like they say they want to go buy a car. I was like, okay, you want to buy a car? Would you pay cash for it? It's like, oh, no, I can't afford it. I was like, well, you can't afford it.
Well,
like,
you know what car you can afford?
Yeah.
My Pajero that we got for $1,000. And like people think like, Arj, that Pajero must have been you in your early days.
Yeah.
No, man. Like that Pajero was like just 5 years ago, 4 years ago.
I can't tell you how much I miss my 2009 Mitsubishi Lancer manual. It's got like 200,000 Ks on it. I can't believe I sold that car.
Yeah, that's what I drive right now, right?
Well, this is the person now. Hence why you're the senior strategist, not just strategist, the senior, because you don't make silly mistakes with cars.
I'll let my wife talk me into getting a family car. Right?
Yeah.
I want to get my little runaround car back, you know. But I always say to people, if you can't justify spending cash on a brand new car, then don't buy it. Why would you? Because you're still, if you get a loan for it, you're still paying that much for the car. Like it's still coming out of your position, but then you're paying interest on it. So like it just, once you put it to people like that, they typically make better decisions. So
it's nasty when you essentially pivot from the investment growth and the investment lending to other types along the way.
Enjoying the show? At Fouracre Financial, we believe property is a game of finance, and we're here to help you win it. Whether you're still building a portfolio or looking to formulate your exit strategy, our tailored mortgage strategies are designed to simplify your journey and supercharge your confidence. Are you ready to take the next step? Visit fouracrefinancial.com.au and book a free strategy session with us today. Let's make property investing less stressful and a whole lot more rewarding.
Now, Adrian, Jack's mentioned finance. He also touched on accounting. Yep. I want to take a step back and go, okay, yes, you're a strategist where you're helping people put all the pieces together, but there's all these other players in the mix. So what's the structure? What's the makeup of a strategy when you're considering it for someone? Like we've talked finance. What are all the roles that people play or the things you consider in strategy?
Yeah, there's quite a few different aspects, and I see the strategist as that sort of hub that connects everyone to get together and puts all of the pieces together. I'd say there's definitely the lending side of things, as Jack alluded to, of hey, how can we get finance? How can we continue our journey and make sure that we can actually get the funds or the borrowing to continue that journey of purchasing and expanding the portfolio? The other side of things, as Jack kind of also mentioned, is cash flows and making sure that people don't extend themselves. There's irresponsibility when it comes to purchasing maybe certain assets.
Yeah.
But there's also the measure of making sure that people don't extend themselves in their cash flows and we talk about buffers and making sacrifices. but you also don't want to be eating rice and beans just to make sure that you can make your repayments and everything like that.
Yeah.
Other aspects are definitely the accounting side of things when it comes to your cash flow, depreciation, and all of those, once again, benefits or considerations of the strategy. And then I guess the last part is once you tie that all together, that's when you can get a really good picture of the overall strategy. But if we're talking short term, what does the property that we need to purchase right now look like, and creating that brief that really serves a purpose in the portfolio, and then connecting the research, as you know, to make sure that the brief dictates the research of where we go, what kind of asset we purchase, and what would really take the portfolio further and serve those goals.
Yeah, so that summary there is really helpful, because to me, you're now unraveling what strategy is made up of, right? We've got research, which is the selection of the asset and the market we're going to. Then we've got the acquisition piece, which is the asset we specifically buy, yield, price point. Then we've got finance, and then accounting hybrid with finance, the structures we buy it in, the lending in which we can carry, the cash flow of that lending versus the rent. And then lastly, there's risk profile and also people's buffer position.
Yeah.
So like, if you're not considering every single one of these things on a strategy, you're literally trying to throw a dart with a blindfold on. You're literally just going, it's about the next purchase, and you're not considering the whole portfolio. And I think that's one of the X factors. Like, we always wanted to create an InvestorKit specifically. I actually copied this from Private Bank at CBA. I told myself that if we're going to build out a business model, that's the model to build. Not one person trying to be, I'm your broker on Tuesday, I'm your accountant on Thursday, I'm your property buyer on Friday, and then the marketing person, the research person the other days. Because what that does is you're not going to get expertise across every one of these swim lanes. It's about specialist models where you go, hey, the 5-to-1 ratio, which is in Private Bank, and that was where we had the acquisition, the strategist, the research team, the onboarding team, the client success team. And that's where strategy in isolation can play such a role, because it's so depth. It's like there's so much depth there. Coming to strategy and just wrapping up on one piece is that when people are considering it, that next property could look really, really good in front of you. Like, you could be excited about buying that next property. But we talked about risk profile, we talked about buffers, we talked about cash flow. When do you go tell someone, because of this in the strategy format, I kind of want you not to buy that next property? What are some things that you see there, Adrian, where you're like, probably not the right time for you to buy? Even though, yes, we're a buyer's agency, we want to buy for others. Yeah. We always tell people when not to buy, because we see things that don't meet what I think a successful strategy should meet.
Yeah, I think the big one is definitely, as of right now, cash flow. Interest rates have risen, and probably went a little bit beyond what people expected in the previous years, when maybe they purchased and they've, at that time of assessment, they went, hey, this makes a lot of sense financially. As rates have risen, they've gone, oh, this is looking a little bit tougher than what I expected. And I think for a lot of people, they can overextend themselves in that sense because they feel really confident, but they actually haven't run the numbers on what their household cash flows look like and how much they can afford to fork out every single week, every single month. So while we don't provide financial advice, we can kind of get a little bit of a gauge of what their savings and cash flow looks like. And there will be certain circumstances where people will be really eager to get into the market. You know, they're getting FOMO, they're hearing about all of these things on the news, but it's not the right time for them. They should just take a step back and wait. The other second main one, I think, is also people, once again, thinking really short term and not planning ahead. I think the big one is usually when they're thinking about purchasing the home and they go, I want to purchase the home in a couple years, and they haven't factored that into the equation of, if they purchase now, is that even possible? And making sure that they allow for that in, their borrowing capacity, so that they can execute on that big ticket item, which is really a priority for them in their life. We often talk about, reinvesting and strategies and constantly investing. And as you've said, we're a buyer's agency. We want you to purchase. But if that's what's really important to you, is getting the home, then you need to factor that in your strategy as well.
100%. And Jack, do you see like blockers on the finance front too, where you're like, it doesn't make sense to buy that next one? Because I've seen that from your team as well, where it's like really well-placed guidance where you're looking out for a customer. It's like, hey, strategy suggests, numbers suggest you can. Yeah. Your eagerness is high, but then you're looking at it and you're like, maybe not.
Yeah, I think some situations will be like a brand new casual employment right? Where you've got some, they just started a casual job and you've got some backyard third-tier lender that'll give you the money at 10% with a risk fee and all that. It's like, yeah, but you could just wait a couple months and get prime lending, and like a pre-approval is gonna it's gonna take you that long to find a property anyway. So that, as well as like a self-employed client who has got short-term ABN, again, some backyard lender will happily give them money at a stupid rate and risk fees. But if they just give themselves a wage for 6 months, or wait a few months till the ABN registration's there, or a tax return, full years of tax return kick in, then prime lending kicks in again. So little things like that, I think, to make people aware of. Because again, like, I'm sure there'd be some brokers that'll happily just like Wild West type. I'll get that loan, don't worry. But like, for us, it's not about that. Like, we're doing good. We want to do the right thing by the customers, because eventually the customers will look back and they'll know that you did the right thing by them. Because I've had that before I was in finance. I had a broker do something for me, and it was like, that wasn't the best thing for me. And I realizing that, I never went back to him, and taking that into my career now is always trying to do the right thing by people.
See, like, that to me is a winning strategy. It's considering finance risk, it's considering personal cash flow risk, it's considering buffers, accounting structures, sequence of steps to go from where you are today to end goal, and reverse engineer the purchases you need. Considering finance traps, things like car loans, credit cards that
novated leases.
Shouldn't be in that timing of events. And I think like that's where strategy comes in, and everything underneath that is a component of it. Everything underneath that is a tactic, not necessarily a strategy. And that's where, if you're investing and you're listening to this episode and you're going, okay, now I've got clarity, as long as you've got these core points covered, then you can put together an actual portfolio strategy, not just a transaction strategy. And so that's the big takeout for this episode, is that we want you to build portfolio strategies. We want you to be aware of portfolio strategies and all the different teams that come under it to make a successful one, rather than go out there, throw a dart, purchase a property because the numbers look great or the area looks great, and then you forget how it fits into your cash flow, the lending that you were meant to take out, and which structures and which name, and then what buffers you're meant to hold. So if it's not holistic in covering all those parts, we'd rather you not buy. That's the key thing for takeout today. Thank you so much for tuning into this podcast. To hear more like this and to help us spread the word, don't forget to leave us a rating and follow along for our next episode.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Game over.